This is Yum China. It's listed in the New York Stock Exchange, ticker YUMC, and then it had successfully listed in Hong Kong, secondary listing in September last year, and the stock code on the Hong Kong EX is 9987. Yum China is the largest restaurant operator in mainland China based on 2019 system revenue. Its growing restaurant network consists of, I think all of you would be very familiar with its brands, the KFC brand, Pizza Hut, as well as some emerging brands such as Little Sheep and Huang Ji Huang. Little Sheep and Huang Ji Huang are both hot pot chained restaurants selling hot pots, Chinese hot pots, and they have also their own coffee. Their own restaurant selling or cafe selling coffee and joy. East Dawning 东方既白 is a Chinese fast food chain, and Taco Bell and Lavazza. Lavazza is the JV, their JV with a very famous coffee brand in Italy. So they are bringing together their own coffee brand, Coffee and Joy, as well as Lavazza, to expand in the emerging coffee market in China. So total store count reached 10,150 at the end of September last year. Now their restaurants, their stores cover over 1,400 cities in China. You can see despite the pandemic, they continue their store opening pace. In the third quarter last year, they opened a total of 660 new restaurants for the first 3 months. For the first 3 quarters in 2020, and in the third quarter they opened 312 restaurants, mainly comprising KFC. 227, and others include Pizza Hut and Huang Ji Huang and Little Sheep. So as of the end of September last year, total restaurants operating in China reached 10,150. KFC accounting for nearly 7,000, and Pizza Hut 2,277 restaurants. Others coming to close to 1,000 restaurants. Okay. The other slides, I will show you the revenue breakdown. So to Yum China, KFC still accounting for nearly 70% of the revenue. In the last 3 years, its share of revenue of the group came in at between 65% to close to 69%. Actually, in the first 6 months of 2020, KFC accounted for more than 70% of the total revenue. And then the other 20% or so came from Pizza Hut. And then all other segments accounted for about 1.5 or close to 2% of the total revenue. So for the last 3 years, the revenue increased quite steadily. And of course, we don't see those, the kind of sharp rise. It's slow and steady, from $7.7 billion to $8.4 billion. Last year was 2019 was $8.77 billion. But for 2020, we do expect, because affected by the pandemic, that its revenue and profit will be adversely affected. So you'll see a drop in the revenue in the whole year of 2020. Okay, another highlight, investment highlight of the company is digital and delivery capability. Yum China has one of the largest digital audiences in the world. It has more than 285 million members as of the end of September last year, a gain of 55 million compared to the third quarter of 2019. And sales coming from these members accounted for more than 60% of system sales. So these are the faithful customers or the repeated purchase from their member. Uh, as delivery in the third quarter of 2020 accounted for about 28% of the total revenue. But digital orders, that means clients placing their orders online, accounted for nearly 80% of their sales. So Yum China is quite ahead of the, compared to its competitors in terms of the digital development as well as delivery. As for delivery, it has its own delivery team. Also, it leverages on third-party delivery platforms such as Meituan, Eliaome. So it also leverages on third-party platforms. Okay, the business strategy of Yum China is to grow sales and profits across its brand portfolio through both organic growth and as well as growth of franchises and online business and development of new restaurant concepts. Currently, about 1/5 of their restaurants are run by franchises franchised. 4/5 of the restaurants are company owned. So this will imply better management by the company, and its long-term goal is to build a network of 20,000 restaurants. So it has a long-term plan to nearly double is restaurant network, is the number of restaurants from the current 10,150 to 20,000. Through the secondary listing in Hong Kong, it raised about 2.2 billion US dollars. So this bolstered the company's total cash and short-term investment balance. At the end of September last year, it is sitting on a cash of 4.2 billion US dollar, and the company has no debt. Okay. As for the use of the IPO proceeds, the company plans to use the proceeds to expand and deepen restaurant network, invest in digitalization and supply chain, and also invest in food innovation and other value proposition, and also will seek high quality assets to invest. The rest of the proceeds will be used to replenish working capital and general corporate purposes. Okay. So this is the financial performance of the company in the last few years. So until 2020, this is 2019, you can see that the revenue as well as the profit both grew very steadily from 2001 to 2013 to 2019. But last year, we expect a drop in the revenue as well as the profit because of the COVID pandemic. But we do expect the company to be back to growth mode in financial year 2021. This is our 2021 projection. Revenue is expected to grow 19.8% year on year to 9.8 billion US dollar in financial year 2021, and net profits is expected to grow even faster, to grow by 34% to 840 million US dollar. The company's earning per share is expected to grow by 28% in 2021 and subsequently at a rate of 9.8% per annum in the next 5 years. So the company is also seen as a defensive stock in terms of dividend payout. If it manages to grow at this expected rate, close to 10% per year. So we also expect stable growth in its dividend payout in the next 5 years. It has suspended quarterly dividend payout last year because of the COVID-19 pandemic, but the company has stated that they will resume paying dividend in the fourth quarter of 2020, last quarter of 2020. So this year, as their business continues to recover, we expect and they will pay out more in dividend to shareholders. Okay. Our target price for because it's listed both in the US and Hong Kong, so we have a target price, a US dollar target price as well as a Hong Kong dollar target price. US dollar target price 69 US dollars. We recommend to buy at 57 and set a stop loss at 52.5 US dollars. As for the Hong Kong target price, we set at 545. Currently, it's trading at 455. So there is 90 Hong Kong dollars upside. We recommend to buy at 448 Hong Kong dollars and stop loss to place the stop loss at 420 Hong Kong dollars. Okay.